Hey folks, Dan Frio here with your market update for November 4th, 2024. So today we're just going to give you pre-election jitters, I guess, on Wall Street and the bond market. And then don't forget on Wednesday, the Federal Reserve is going to come out and tell us exactly what they're going to do. So let's put everything in the context of what we're going to see this week. Here's where mortgage rates finished last Friday after that dismal jobs report that was just issued, but let's see what this week has in store for us. So if you look to the headlines right now, here's what we see. It's red ink across the board, and it says Dow falls points ahead of the presidential election. So I even have Steve Leeson here from CNBC today, and he's kind of like, we don't really know what's going on with the bond market and the equity markets the day before the Federal Reserve, or the day before elections, because if you look at the economic calendar, there's nothing there. The only thing we have today is factory orders. The previous reading was negative 0.8, and it came in at negative 0.5. So it wasn't as bad as expected. But the headlines over at Yahoo Finance basically read this, and it's telling you the day. Why banks are probably rooting for Donald Trump. That's not my opinions, but it's just what the headlines are on YouTube. And then it says Wall Street is counting on Powell to keep Fed rates cuts on track. So that's what we're going to contend with right now. So let's get over to the economic calendar. Like I said, there's nothing for today. So the bond market right now is telling us this. It's up 27 ticks. That's a pretty darn good move. So we're probably most likely going to see mortgage rates tick back into the 6% range. But there's an interesting view from Steve Leisman here on how the bond market and basically the equity markets as well are adjusting today after some of the news that came out last week. But the economy's pretty much okay right now based on a lot of the economics. But he has a contention. He's like, the markets right now, we don't know why a lot of these, especially the bond market, is jumpy right now. So let's get over to his interview so you can understand some of this. He's going to start talking about neutral rates and all this stuff. I'll put in layman's terms when he's done. So let's listen to his interview, and then we come back. I'll explain all this to you, and then we're going to see how the CME FedWatch tool is moving based on today's data. So let's check it out.
There's the election this week, but also a small matter for investors of a Fed meeting. Senior economics reporter Steve Leisman looks at the debate on whether the Fed should cut rates after what we've seen as far as a surge in bond yields.
Yeah, Joe, this is interesting here. Some have looked at the recent surge in those bond yields and concluded the Fed shouldn't cut rates this week, but that might miss the real debate going on in markets. It's really a debate over your favorite topic, Joe, the terminal rate, or that is where the Fed ultimately stops.
So that's what we're going to focus in on. Where does the Fed, they're going to cut, but cut down to what? And that's what they're going to explain.
The Fed cut 50 bips in September. The 10-year yield has surged 80 basis points, an unusual move with more cuts ostensibly on the way. But while that's been going on, take a look. The probability of a 25 basis point cut this week has remained remarkably steady, now at 98. It's been north of 90% the whole time. Chance of December is now at 80% or north of 80%. It's January and beyond. That's where the debate is about where rates are going. And that's part of a longer term debate that's been going on about the Fed. If you take the October 25 contract, take it as a proxy for the terminal rate. That is where the Fed stops. It's up more than 80 basis points from 282 to 363. But notice, it's still 100 basis points lower than the current rate. So the market still has lots of cuts built in, just a lot less than it did before. Behind the yield surge, we've had some better growth numbers, somewhat firmer inflation, and of course, policy uncertainty with yields rising with the improved chance of former President Trump to be reelected. In fact, Wells Fargo, among others, this chart is making the way around Wall Street, has for a couple days now. The 10-year yield increasing with Trump's chances of victory in prediction markets. It could be expectations for higher growth, could be expectations for higher deficits, or both. Assessments, of course, of Vice President Harris's plan show less new additions to the fiscal deficit, but continued high levels of red ink. The election uncertainty adds to the market's uncertainty over what is that terminal rate. It's really hard to predict monetary policy if you don't know fiscal policy if a big change is coming. But that confusion should not, at least for the moment, extend to the idea the direction of rates remains lower regardless of what the 10-year has done. Had a nice chat with Michael Ferroli over the week on Friday at JP Morgan. He says the market now is much more aligned with the Fed, which is once you get through November and December, it's like an every other meeting kind of thing for next year until you get down.
Said this morning.
You know, I heard Roger steal my entire line of thinking at 6 a.m. and I wondered about turning around in the traffic and coming back home because what Roger said is what.
If we talked about
So Roger, what they're referring to is this Roger guy. He's a former Fed official, so they usually have him on. He'll tell them what's going on. He's been pretty much right on line what they're expecting. So he's expecting the Fed to do exactly what they were talking about. So that's where we're at right now. So the whole week is going to be triggered around, or basically the election, and what the Federal Reserve does on Wednesday. So that's basically the report for this morning. Later this afternoon, I'll show you how all this mess ended for the day. But who am I again? Well, my name is Dan Frio. I'm actually a loan officer. I'd love to work with you. I'm licensed in all 50 states as well as Puerto Rico. So if you're out there trying to buy that first house, maybe trying to buy that first investment property, maybe looking to refinance, if you need a reverse mortgage, I'd love to help you as well. So go to the rateupdate.com. If you're looking to buy that first house, please do yourself a favor. We have grants right here. There's 3 hand-picked grants up there that basically it's as close to free money as you can get when you're buying your first house. And then there's one that's Chicagoland area that we're here to help you with on that as well. And then if you want to get the ball rolling, just hit the apply now button, or what most people are doing right now, they're calling in. So if you want to give us a call, you can scroll all the way down to the bottom of the screen, and you're going to find that information right down through. Hold on, it got sticky. Right down through there. Our phone number is 844-775-5626, or you can reach me at dan@therateupdate.com. And yes, it is me answering those emails. So I will be back later at the closing bell to let you guys know how all this mess ended for the day. Thanks for watching. See you then. Bye-bye.